union locally and nationally.
Thank you for selecting this topical issue today on what is a very serious topic with both a local element from the town of Newbridge in South Kildare, my own constituency, to the very national element of the credit union movement in general and lessons learned from what's happened in the past. And I'd like to start off, and I thank the Minister for attending here today. I'd like to start off by just reminding people about exactly what did happen in Newbridge Credit Union. In early 2012, in January 2012, the Central Bank appointed a special manager to go in and run Newbridge Credit Union. And effectively what happened was, for the next 22 months, that special manager stayed in place in a position where they could say very little due to a gagging order, a High Court gagging order that it was, and that very little information came out to the members of that credit union. They were kept in the dark and led to a huge amount of frustration. People didn't know there was problems with their credit union and they weren't able to be told what those problems were. And it led to any amount of speculation as to what had happened. And I think, looking back in it, when the Central Bank report came out in November 2013, just after the transfer to PTSB, we figured out, and we got examples of some lending that wouldn't be traditional, significant lending that wouldn't be traditional to credit union movements, that had caused enough of the significant problems. And but we also saw, looking back on the central bank and decisions that it made with the appointment of special manager, that I think things could have been handled much better there. For people to have been left in the dark for as long as they were without that key information was very, very difficult, and very difficult in the town. The aftermath now is that we have PTSB, when they took over the transfer of the assets and liabilities in November 2013, have since acted in the credit union building in Newbridge in the name of Newbridge Credit Union, albeit not in a position to give out new loans or credit union loans as it was, but to continue to run the loans. And that has left us for the last year and a half with a town which is the 15th biggest town in the country that has no credit union services effectively. But this has really come to a head in the last couple of weeks when PTSB has sent out checks to thousands of members of the credit union, what was the credit union, with the final closure of those savings accounts. And members, it's the one check in the post most people didn't want to get, because they didn't want to see their credit union close. They didn't want to see the loss of those services. And effectively, we now have this very large town that doesn't have access to credit union services, that doesn't have the ability for businesses to take out those small loans. The big benefit for small businesses in the area, that when the dividend was paid at the end of the year, that people then had more money in their pocket heading into the Christmas period. And then many people in the town who don't normally traditionally bank with banks or want to be with banking institutions, but like to be members of a credit union, that option has been gone from them. And it is absolutely crucial, Minister, that we work to ensure that we see a return of those credit union services to the town of Newbridge. Ultimately, what I want to see is a credit union and credit union services operating out of Newbridge, in Newbridge again. But as a starting point, what we have got to see is that people who are in Newbridge have access to the credit union services as an initial starting point, which we don't have at present. There is no common bond area covering Newbridge. Naas Credit Union nearby has made an application to the Central Bank. I met with the Central Bank in January, supporting the application by Naas, looking for them to consider the options. That proposal is still under consideration, to the best of my knowledge. To me, it's absolutely crucial that we allow a situation develop that Newbridge residents can access credit unions. Down the line, you would hope that a facility would open within the town itself, but to start with, people who want to access those credit unions services have to be able to do so. It's just too big an issue. And the people and the ordinary members of Newbridge who made no mistakes and are not at all at fault for what happened with the credit union are the real losers here at present. Thanks, Cian Corlin.
Thank you. Minister.
Thank you very much, Cian Corlin. At the outset, I'd like to thank Deputy Hayden for raising what I know is a very important issue for the people of Newbridge, and indeed for you personally, and one which you've raised in this House, and I know with my colleague, the Minister for Finance, on a number of occasions. Well, the Government is absolutely determined to support a strengthened and growing credit union movement, and has highlighted its support for the return of credit union services to Newbridge. The Minister for Finance's role is to ensure the legal framework for credit unions is appropriate for the effective operation and supervision of credit unions. In line with the Credit Union Act 1997 as amended, the registration of a new credit union and an extension of a common bond of an existing credit union is the responsibility of the Registry of Credit Unions at the Central Bank. The Minister for Finance was informed by the Central Bank that they sought to address both financial and governance issues at Newbridge Credit Union from 2008, which ultimately led, as you said, to the appointment of the Special Manager in January 2012. Following a thorough assessment and in the context of the existing legislation, it was determined that the only viable resolution of the financial difficulties was a transfer to another entity. It is important to understand that the practices in Newbridge that operated over many years, and some of these can be illustrated in the following key lending statistics. An individual loan of €3.2 million, which was in excess of the Credit Union Act restriction of a max of 1.5% of total assets. 52% of the loans exceeded 5 years in duration, as opposed to the maximum of 20% of the loans as set out in the Credit Union Act. The average loan in Newbridge Credit Union was €17,281, as compared to the average credit union loan, which was €7,764. There were 26 loans of an average value of €550,000, which were seriously distressed. These figures illustrate that Newbridge Credit Union was operating in a very different way from a normal credit union. The structure of some loans was more akin to development loans, with bullet repayments as opposed to regular repayments. All available options were considered by the central bank before the decision was taken to transfer all assets and liabilities, excluding the premises of the credit union, to permanent TSB. In line with the resolution options available, the central bank undertook a process which involved the examination of possible credit union combinations. These efforts resulted in an approach being made to a number of other credit unions. Ultimately, however, no credit union considered that it was in its best interests or those of its members to complete such a combination, even in the context of considerable taxpayer support. The central bank also considered proposed solutions put forward by various interested parties, but formed the view that none were viable. The transfer to permanent TSB was ultimately the only viable solution available, with the alternative option being a full-scale and immediate liquidation of the credit union, with interruptions to members' access to their funds and risks to depositors not covered by the Deposit Guarantee Scheme. This action was taken to protect members' savings within Newbridge Credit Union and to protect confidence and stability across the credit union sector and the wider Irish financial sector. The alternative option to a transfer to permanent TSB, as I've said, was that full-scale immediate liquidation, which I don't think was in anybody's interest. The transfer to permanent TSB ensured that members could continue to access deposit and lending services within the local community and also ensured the protection of their savings. It is acknowledged that there is clearly a demand for the services of a credit union in Newbridge, and the Minister for Finance has been informed by the Central Bank that it is open to meeting any party interested in restoring credit union services to the Newbridge area, including the possible extension of the common bond of credit unions in the local area. Any proposal to establish a new credit union or to extend the common bond of an existing credit union is subject to regulatory approval by the Central Bank. As of the 31st of January 2015, the Central Bank has received a proposal from a local credit union to extend an existing common bond that would allow for the restoration of credit union services to the Newbridge area. This proposal is currently under consideration by the Central Bank, and a final decision will be relayed in due course to the credit union. I'm shortly going to run out of time on this, but the funding...
Keep going,
Is that okay? Thank you. The funding required for the protection of Newbridge Credit Union's member savings is being provided by the Credit Institutions Resolution Fund and is fully recoupable via a levy over time. The government has made €500 million available to support the stability of the credit union movement. This amount is divided between two distinct funds, with €250 million in the Credit Institutions Resolution Fund for resolution purposes, such as is in the case in Newbridge, and €250 million in the Credit Union Fund, which provides funding for voluntary, incentivised and time-bound restructuring under the Credit Union Restructuring Board REBO. In conclusion, the Minister for Finance would like to emphasise the government's recognition of the important role of credit unions as a volunteer cooperative movement and the distinction between credit unions and other types of financial institutions. The government's priorities remain the protection of members' savings, the financial stability of credit unions and the sector overall. The government is absolutely determined to support a strengthened and growing credit union movement and would encourage the movement to work with its stronger credit unions so that they can provide a viable option for assisting weaker credit unions. In particular, the government would, and the Minister for Finance would like me to highlight his support and the government's support for the future return of credit union services to Newbridge. And as I've already outlined, there is a proposal with the Central Bank which is subject to their ongoing consideration.
Deputy Hayden.
Cian Corley. I have a couple of direct questions leading out of that. 53.9 million, Minister, was set aside, or made allowance for, provision was made for 53.9 million. How much of that money is going to ultimately be needed to solve the problem in Newbridge? Because I'm very mindful this is money that's been ultimately paid for by other credit unions that let the breadth of the country, who are all paying levies into the Credit Institutions Resolution Fund. So there's no such thing as a victimless crime in many respects. In relation to investigations, what lessons have been learned? And from a national point of view, how can we be sure what happened in Newbridge never happened again? And what investigations have taken place that you're aware of to see what happened, to see the cause, and to make sure the lessons have been learned from that? Has there been any criminal investigation into what was happening? And has there been a review of how the central bank and the role it played throughout, and the levels of governance that were there? I know it was a period of light touch regulation during the previous, and it wasn't the only financial institution in the country to run into difficulties due to that. But what review has happened of that? And finally, Minister, the element of the building, which is probably one of the most finest and iconic buildings in the town of Newbridge, which in some respects was maybe part of the problem in that the cost it had been, but it is a fine building here now that the people of Newbridge feel a very strong sense of ownership of. I take from your answer that the OPW, in looking earlier, I would like to see the OPW's role here in acquiring this building that I'm aware of, the future uses of the building. I think the intro services that have been mooted and discussed around the town locally, we don't have intro services in Newbridge that would be very beneficial for us. Intro being a single point of contact for people who need a whole range of access to supports to get back into employment, and that's something we very much need in the Newbridge area. But also, as I raised with you previously, privately, the need for a community use for that building, and a community use that, in my mind, would support local existing business and those startups business. That building can be used to the maximum community use in the town where possible. Thank you, Count Corlin. Thanks, Minister.
Thank you very much, Deputy. The Minister for Finance agreed to the Governor of the Central Bank's request for the payment of a financial incentive of up to $53.9 million to transfer the assets and liabilities, excluding the premises, of Newbridge Credit Union to permanent TSB. All the assets and liabilities of the Credit Union Limited, excluding the premises, were transferred to permanent TSB pursuant to a High Court order dated the 10th of November 2013. The financial incentive agreement between the Central Bank and permanent TSB comprises of the following elements: €23 million in cash up front to fill the hole in the balance sheet, restructuring and integration costs of €4.25 million, €2 million for other transferring liabilities, and finally a risk share on the transferring loans, whereby the state will absorb 50% of the losses where loans perform below their transfer value, and 50% of the gains where they perform above the transfer value. If the loans were written off entirely with no recovery, this would have resulted in an additional €24.7 million total cost. I have been informed by the Central Bank that the position in respect to the drawdowns to date and expected further expenditure from the agreement is as follows: restructuring costs, payments to cover the establishment and maintenance of the recovery and underwriting platform for the Newbridge Credit Union loans. This is capped at a possible €3 million. To date, €1.3 million has been drawn down. The Central Bank expects to incur a further €200,000 in such costs. In relation to integration costs, which are payments to cover the costs of any redundancies of former Newbridge Credit Union staff, this is capped at a possible €1.25 million. To date, nothing has been drawn down, but the Central Bank does expect to incur the full €1.25 million allocated to integration costs. In relation to transferring liabilities, this is capped at a possible €2 million, and to date €300,000 has been drawn down. The Central Bank does not expect further drawdowns under this heading. And in relation to loss compensation payments, which are payments to permanent TSB to cover deterioration in the performance of the credit union loan book, the Central Bank has the 50-50 profit and loss sharing arrangement over a 10-year period with permanent TSB in respect of these loans, so that the maximum cost the Central Bank can incur is €24.7 million if all loans defaulted. If the loans perform well, the Central Bank may have no liability under this heading, or could actually be paid by permanent TSB. Given the performance on the loan book to date, the Central Bank expects to incur some costs under this heading, although nowhere close to the capped amount. Just, if you don't mind, with your indulgence, Cian Corla, in relation to the issue of offences committed or lessons learnt in relation to Newbridge Credit Union, Section 33AK, subsection 3A of the Central Bank Act 1942 requires the Central Bank to report information to other bodies, including the Garda Síochána, if it is suspected that a criminal offence is being committed by a supervised entity, or that a supervised entity has contravened a provision of the relevant act. The Central Bank commissioned a report from the liquidator examining the governance and management practices leading to the appointment of the special manager. The Central Bank considered the contents of the liquidator's report and whether any further action may be required. The Central Bank has decided that no further regulatory action was required. However, the report and its content will inform regulatory decisions of the Registrar of Credit Unions concerning those involved in the future. Finally, in relation to the current position regarding the ownership of Newbridge Credit Union, I speak in my capacity as Minister of State with responsibility for the Office of Public Works. The liquidator has now signed contracts with the OPW to purchase Newbridge Credit Union's former premises, and that sale is expected to be formally completed very shortly, within Q1 of this year. As you quite rightly say, the building will provide very important intrio facilities within Newbridge, which is much more than just the traditional Dail office. It's about getting people back to work. It's a very important community facility. And as you have approached me, and indeed the Taoiseach, in relation to community use of spare capacity within the building, at an official level, my own officials in the OPW and officials in the Department of Social Protection are meeting on that matter, and I think it's fair to say both departments are very positively disposed to examining ways the community can use any additional capacity once the intrio services are established in Newbridge. Thank you.
Thank you. That completes topic and issues for today. The fourth matter had to be postponed.